Tech leading the sell-off again with the triple Qs down more than 30% this year. Our next guest isn't buying any equities here. Thinks the NASDAQ could go all the way back to pre-pandemic levels. Doesn't have that much left to go, I think. Let's bring in Danielle Shay. She is Director of Options at Simpler Trading. Danielle, it's great to check in with you. Let's see how you're trading the market. And we will start with ARKK, Cathie Wood's Innovation Fund, down 61% this year. You think it's still a short here, namely through the SARK?
Yes, Kelly, I do. I mean, this is one of the most relative weakness ETFs in the market out there right now. And unfortunately, with the way that the market is just continuing to bleed, I think that there's still more downside ahead in here. Now, I know that there's a lot of traders or investors out there that aren't very comfortable with coming in and shorting. And so that's why I'm really looking at some inverse ETFs that they can buy. There's the SARK inverse ETF that you can actually buy, which is then shorting ARK itself. And I think this ETF still has at least another $10 to $15 of upside. Now, I will note that, shorting at the lows of the year is not a good time to get in, but I've been getting in and out of this ETF at various points.
And real quickly, trading something like this, does it erode capital over time because of the structure? Like, how long should you feel comfortable owning something like this?
So for something like this, I'm really using it as a trade versus a long-term investment just because of the volatility that's in the market right now. I do think that this fund in the long term continues to go down, primarily because if you look at all of the top tickers within that fund, a lot of them are losing money and most of them are continuing to tank. Tesla's the one exception that I think could eventually bring this fund higher. But if you look at the likes of something like Roku, I can't imagine that they trade higher. So for right now, it is a short-term trade. But in the long term, if we continue to stay in this bear market, I'm looking at this to be something that I can trade over the next couple months.
Wow. Okay. All right. So let's move on then, because it's not just ARKK. You really think the triple Q complex is going to come under more pressure. There's a short instrument for that as well. The S triple Qs. Some thoughts on this one? No glimmers of hope here yet?
I don't see any glimmers of hope, Kelly. The biggest glimmer of hope that I see is the fact that the put-call ratio is the highest that it's been since March of 2020. And what that means is that investors are short, and if there's some kind of bullish catalyst, we could see the Qs trade higher. But overall, the macro situation is so weak, and the Fed is not going to bail us out this time. So I think right now what we have to do is just continue focusing on downside. I know there's a lot of investors out there. They don't want to sell their AMD. They don't want to sell their Microsoft shares. So in that instance, what you can do to get through this time frame is hedge with the inverse QQQ, because I do think that the NASDAQ is going to go back to the February 2020 levels, and you're going to see continued pain in your long shares.
Yeah, as you say. So if people don't want to let go of these stocks just yet. On that note, let's talk Apple and Microsoft. You think there actually could be candidates for a short squeeze here?
Apple and Microsoft are really my two favorite stocks that I like to trade when the market does start trading higher. If you look at yesterday, I don't remember exactly how much they were up. I think 3 or 4%. Typically, when the market does short squeeze, you see buyers coming into these names. And so while they don't have, high short interest in the way that you would talk about AMC,
right,
because of the way that the interest comes in from buyers on days where the market actually does gap up and we're seeing some positivity, those stocks are usually the ones that go first. And also, they are the backbone of our technology economy here. So in the long term, they're going to still be around. So might as well focus on those.
All right.